We're going to talk about stocks versus real estate returns from the last 23 years, and the results are shocking. So make sure you tune in until the end so you see what it is that's so different between stocks and real estate returns. I'm going to give you a little hint. It's a lot of money. Hey guys, if you're new to the channel, I'm Ariane, and I retired at the age of 27 with investment income, and now I co-own over 2,400 rental properties with partner investors. I made this channel so good people like you can learn how to get financial freedom as well for you and your family, because you deserve it. Let's get on to the video. Today, we're going to talk about stocks versus real estate returns. And first, I want you guys to remember that there are 4 different ways you make money on investments. First, there is cash flow. This is when you have recurring income coming in each and every month or every quarter. So this usually, one example is dividend paying stocks or income producing real estate. The second way to make money on investments is appreciation. So this is what most people think when they think of investing. They buy something and the price of that something goes up. So that's mostly what people are used to in the stock market. That happens in real estate too. When you buy a house, the price can go up, but most of us real estate investors focus mainly on cash flow. The third way you make money is by paying down the loan. We call this the loan pay down. So if you buy an investment property with a loan, every month you have an expense, which is your mortgage payment, but that expense actually pays down the balance of your loan. So you actually get a little return from that each and every month. And number 4, there are tax benefits. So the IRS wants to incentivize us to buy affordable housing so we can rent it out to other people who maybe can't afford a home right now. So that's why they give us a tax incentive, and we actually get a return on our investment from that as well. So those are the 4 different ways you make money on investments: cash flow, appreciation, loan pay down, and tax benefits. There's a 5th hidden way, which is leverage. So for example, in real estate, when you buy a $200,000 property, you're usually not buying it with $200,000 cash, right? You're usually putting 20 to 25% down. So you actually get to magnify your results. And you're going to see some of that here in the examples. So here on the screen, you can see a sample investment property. And I'm just doing this one example for you so you can kind of see an idea where the 4 ways you make money on real estate comes from, right? So 1, you have this cash on cash return. This is the cash flow. Number 2, you have that return on loan pay down. So this person gets $3,540 a year in loan pay down. So that's equivalent to a 4.9% return on their money. Number 3, we have appreciation. So this particular deal, we're actually projecting 3% appreciation per year, which is pretty conservative. That equals $9,000 a year. If you scroll back to the top, you'll see that this is a $300,000 house with a 20% down payment, 5% interest rate, yada, yada, yada. From that house, we're projecting 3% appreciation. That's $9,000 a year. But the actual return on appreciation per year is more than 3% because remember, we used leverage. So they actually only put $71,000 down on this property, including the down payment, closing costs, renovation costs, and all that. So that's why the 3% appreciation is actually equal to a 12.68% return on investment on appreciation. Number 4, we also have the tax benefits. Now I'm not gonna go through all the ways to calculate this. Let's just say it's 3.4% ROI there, with a projected annual return of 29.24%. Which is pretty cool, right? You thought you were just gonna get this 8%, but you actually have all these other hidden things that a lot of people don't think they're getting. Whereas in the stock market, whatever return you have is what you get, right? At best, you have 2 of the 4 ways. You have dividends and appreciation, but you don't have tax benefits and you don't have any loan pay down. Okay, so now let's go on to like the juicier piece of this. We ran the numbers on the Nasdaq stock index from 1999 to 2022, and we also took the data from the Federal Reserve on how much real estate prices changed between 1999 and 2022. We plugged all those into a nice big spreadsheet, and these are the results. If you started with $1 million in 1999 in the Nasdaq, today you would have $2.2 $7 million. If you started with $1 million in some real estate investment, and again, like this is designed to like give you a broad example. This person could have done a lot of different types of real estate investment. We're just using kind of the median number so that we can at least have some sort of comparison between stocks and real estate. Someone who started with $1 million in 1999 today has $276 million from real estate investing, which is crazy, right? That's a difference of over $200 million. So now we're going to go over the meat. So now we have the spreadsheet of the Nasdaq versus real estate actual performance between 1999 and today, 2022. So here on the left side, you can see this is the actual historic data from the Nasdaq stock index. We took that. It was an average of about 8% if you did all this. So this is how your $1 million in the Nasdaq turned into $7 million today. Now on the right side, we have all of the ways you make money on real estate, right? So you have the 8% a year for cash flow. You have 4% a year for loan paydown. You have this appreciation, that the appreciation number we took from this column right here. These were taken from the Federal Reserve data, where they took what appreciation the median home in the United States had that particular year. So obviously this is not going to be super accurate for wherever you're living. If you're in a high appreciation state, you would have gotten so much more appreciation. If you're in a lower appreciation state, you would have gotten less. But again, this is the median data, so we can at least have some number on the chart. So this is what it was per year. But as you can see here, we're multiplying that by 3 because this person is using leverage, right? So if it was a positive market, like positive 5.4 times 3 became 16.2% return on appreciation. And we had negative years too. A negative 6.3% real estate year in 2009 what became a negative 18.9% year in 2009. So that's where appreciation comes from. We also had this 3.5% in tax benefits. And if we total it all up, here's the total real estate return. So this chart shows us that in the Nasdaq, our $1 million would have turned into $2.7 million from 1999 to 2022. And in real estate, our $1 million would have turned into $276 million. Crazy. Very crazy. Now, some people are like, oh, well, you're just looking at the reason it's so low is because of the down years, right? Okay, cool. Let's say that you were like you had like a crystal ball and you knew in 1999 that you should not be in the market. So you're like, I'm gonna wait. And you were so smart that you waited the whole 3 years that there were down markets, right? So like 1999, 2000, 2001, 2002 were down years. So let's say you waited it out. So we just didn't give you any, you didn't have a negative, right? And you entered the market perfectly in 2002 and you got that nice 50% boost in 2003. So you erased all of those negative years up front. If you did that in the Nasdaq, you would have $8.4 million right now if you started in 1999 with $1 million. That is a lot better than $2.7 million, which is amazing. And this you were like the best stock picker ever, right? You're amazing. You timed the stock market perfectly. But if we can still compare that to the real estate numbers, 8.4 million versus 276 million, that is still a big difference. Now here's another chart. Some of you are going to be like, hey, it's not realistic for you to compound the appreciation part of real estate every year because that's hard, right? You would have to sell or refinance your property every single year. That's going to be very hard. So we did another calculation where we were just compounding. So we zeroed out the appreciation for 4 years in a row, and then we just lumped it all every 5 years. So every 5 years, you're compounding the appreciation piece. So instead of having $276 million, the real estate investor had $225 million. So it did make a difference, but still much different from $2.7 million in the Nasdaq or the perfect picker version, which is $8.2 million. Now, some of you are like, well, I don't like using leverage. So this is a chart with no leverage. So we didn't multiply the appreciation times 3, and we didn't, you don't have 3.5% tax benefits, you just have 1.25% tax benefits, and there's 0% loan pay down now. So in this chart, if you compare the perfect stock picker to a real estate investor who did not use leverage, it's a difference of $8 million and $18 million. So real estate investors still did better, but we can see here just how much the power of using that leverage is, right? Because it magnifies your results. If you were a real estate investor who did not use leverage in the last 22 years, you would have $18 million from a $1 million start in 1999. But if you did use leverage and you refinanced or sold every 5 years and recaptured that extra money and reinvested it, then you would now have $225 million. So for those of us who are real estate investors, I know some of us can be a little bit scared of leverage. There's a way to use it safely, right? I have so many other videos that talks about that, but the main thing is you need to have a safety net. So you need to have cash set aside so that if something goes wrong, you have 6 months to 12 months to figure out and fix it, right? Because usually the main issue with leverage is, oh, what if the tenant doesn't pay, or what if something happens, all right? So like if you have that safety net, it gives you that cushion so that you can figure it out. So there you have it. Here is the actual historical comparison between the Nasdaq stock index versus the median housing market in the United States of America. If you invested $1 million in the Nasdaq compared to $1 million in the real estate market, and assuming in real estate you compounded your appreciation returns every 5 years, in the Nasdaq, if you skipped all of the negative years up front from 1999 to 2003, you would end up with $8.4 million today, right? So you started with $1 million in 1999, and today you have $8.4 million. But if you had put that in real estate instead in 1999, you would have started with $1 million, and today you would have $225 million. And that's where this chart comes from. Pretty crazy. If you had a crystal ball and you could choose in 1999 where you would have invested in, would you have invested in the stock market and have $8.4 million today, or real estate, $225 million today? I'm just sharing this because this was surprising to me. I am a real estate investor, but I didn't realize how stark of a difference my stocks were doing in comparison to my real estate. I mean, I kind of knew because I had money in stocks, but it didn't grow all that much. But my money in real estate grew a whole lot in the last 8 years I've been an investor. But I didn't realize it was this big and it could get this big. And that historically in the last 23 years, like this is real data, what I'm showing you, that this is the difference. I'm not saying don't invest in stocks. I'm just saying here's some data I found. I'm not trying to debate. Like, look, invest in whatever you want to invest. I just want you to know this so you can make your own decisions and conclusions. A lot of people don't like investing in real estate because they think it's too time intensive. There's actually a lot of ways you can invest as a passive investor. You essentially partner with someone who's doing all the active work and you're the money person, and you can still get similar to these returns that we kind of saw. So I suggest watching some of my videos that talk about that. So I have like a whole playlist about real estate syndications and funds. So I will link to them up here and down in the description below. So educate yourself. Learn about how you can be a real estate investor without it taking too much of your time. Because that's usually the thing I hear most about when people are like, oh, that's great, but I can't be a real estate investor. Stocks is so much easier. Like there is an easier and more passive way to be a real estate investor. And if you would like your $1 million a day to turn into more in the next 10 to 20 years, then you owe it to yourself to at least research and learn and try to find out how that can be part of your portfolio. And I'm not saying don't have stocks. I have stocks in my portfolio. I have crypto in my portfolio. But I do have a significant amount of real estate. That's the biggest holdings I have. I do diversify. I have a lot of real estate. We co-own over 2,400 units with partner investors in different states across the Southeast mostly. We have some in the Midwest, but that is a lot of properties, diversified as well. And I'm a big proponent of watching my investments, right? Like, I want to make sure that if I can impact my investments in a better way, you know, give them more systems and processes and manage our properties better, we do that. So chances are we're getting more than the average real estate investor because we're actually proactive and we're looking at problems and solutions, and we're forecasting issues so that we're not caught in a bind when issues come up. So anyway, hope you guys found this helpful. Please check out all the helpful educational videos we have. We're going to post it down in the description and obviously on my channel as well. If you're on Instagram or TikTok, I pretty much post shorter investing tips there daily. So please follow me on there. We have a free Facebook group called Faster Financial Freedom where you can interact with other people who are working towards financial freedom just like you. And if you found this useful, please share this with someone who doesn't know this yet, because we want to educate more people and we want more people to have informed decisions on what they do with their money. Like, I used to be a broke immigrant and I knew nothing about money, and if I can have the financial freedom I have now, anyone can do it if they put in the time and the effort to learn and do these things that we're talking about. So please share it with someone who you think it will help. And as always, click that like button and click that subscribe button and notification bell so you can see my new videos as they come up. All right, guys, thank you so much for watching. I will see you at the next video.